What's going on, guys? Good morning. Welcome in another live stream here. Monday. Happy Monday. Hope you guys are doing good. And just wanted to kind of get a market update in here before to help all of y'all on your journey. It's obviously quite confusing times right now, but let's try to kind of break it down a little bit. First things first, risk-taking appetite of the market is pretty good so far. On from last week's live stream where we covered a move within the S&P 500, we spoke about how the 38.2 was going to become a reversal support area potentially outside of this trend that has been forming for a long time over the course of months. And so all of these peaks and troughs down here, all the way to the top here, and this area here has become the breakout range from this massive area, right? Technically speaking, we could drag this range back further, but that doesn't matter. The idea here is the upside still remains the 61.8 Fibonacci extension, which is 5301, and since we bounced off nicely at the 38.2, the bullish continuation should be the bias. It is only when we start to break below potentially around, let's see, around 49.28, right? Is a short-term breakup structure which can result in snap pullback, right? So this area here is an area which you have to be very careful, 49.28-ish, right? Because this can serve as liquidity for potential further bounce, or if not, then it bounces here and rejects and then comes further back down, right? So this area here, whatever it is, within this 48.74 and 49.30-ish is a good area for taking some risk, right? This area is a good area for taking risk, so I would welcome the opportunity to short the market only if we broke below this area and then rejected this area, right? That's the only way I would turn bearish right now, okay? To be very clear and focused. Now, if we are looking at a bullish opportunity, then the immediate bounce is 38.2 Fibonacci retracement or extension level here, which will be 50.40, right? That's ideal bounce area. This is the potential bounce area, which will lead into an extension higher first at 51.70, which is the 50% extension, and might find a bit of resistance here, and then bounce up to the 53 ultimately. So long term, we really still want to continue to the upside, okay? Now, that's the plan, that's the technicals, but can the fundamentals back this up, right? And also, we have to look at the NASDAQ also, right? So for the NASDAQ, remember that in order for the NASDAQ to get up into the 61.8, that's still quite a fair bit of room, okay? That's almost equivalent to probably saying that SPX gets up to 5,500, okay? It's because just of the way that the wave cycles are, and NASDAQ tends to be more volatile, right? You can see that NASDAQ's ratios would be more, magnified because it is more volatile. Okay, so the Fibonacci numbers would be more volatile in that nature as well. Okay, it's all symmetrical. Okay. So with the NASDAQ with a lot more room to go, it would have to come back to retest 18,000 as support, right, at some point. Depending on where we want to go from here, obviously, right now it's still in a bull flag situation, after bull flag situation, after bull flag situation, as it is in a very hot secular bull market, okay, and that's a good thing. But remember, your pullbacks are where your entries are going to be, so you have to be aware where those levels are, and that's what I'm trying to get through with you guys. 18,000 here remains key support level for NASDAQ to soak up all this liquidity in this area. We could go as low as 17,930, let's say. That would be ideal for soaking up a lot of liquidity, but also that kind of a pullback would mean that a lot of people would take profits, and that would be a great area to enter long again, right? So that's your ideal scenario with technicals with NASDAQ. Okay, for short, you need to break below this, you need to reject this level, and then you enter short. right? There is no other way to do this, guys. Okay, keep your risk management really simple. This has to break down, it has to come back, it has to retest, it has to fail the break, out, further, back higher, right? And then you can take a short position. So stop thinking short unless you really see the short answer, right? Even here you can see it came up here, it came down here, but then it retraced, went further back down, it didn't break this local high here. So in the end, it resulted moving even higher, right? No, learn to see these patterns, learn to see them, okay? The lower high, lower low situations. And the higher high, higher low situations. You gotta master this shit by now. Okay. Now IWM, as we have been calling bullish for, I don't know, probably what is like 3 months now, or in fact, I called bullish almost when we were bouncing back from these October lows where small caps were starting to look really attractive. And for SPX, we had posted opportunities in March 2023 to buy strongly, and then followed another opportunity in November in 2023 is where we had put out another buy opportunity here when we failed to break lower and put in a lower high, right? So just learn to read the market, learn to read the ebbs and flows, and you'll be fine. And if you don't, just follow along with the pre-markets, right? You have that as another outlet. Once again, welcome in, guys. Good morning. For those of you who are joining this right now, my only ask is you pay attention and leave a like if you can, so that this reaches more people. Okay, in another universe, in crypto land, the cryptos have been running crazy. The altcoins specifically, Bitcoin is currently at 65,000, almost about to break all-time highs, about to breach. So you can see risk-taking atmosphere right now is pretty damn good. People are still willing to pile into this and break this out because they see a potential for value to be higher than this, right? Now, I will say that I own a bit of Bitcoin. I did take a lot of profits off the table at around 50,000 or so. And I'm letting the rest of my positions ride. It's not a very big position because I didn't invest a lot to begin with. But I still did buy it at a very attractive price, so I don't mind. And the second one that I own is Ethereum, which has also moved up. This position is actually up 100%, which is nice. I managed to buy this pretty low, so I managed to clinch a good deal on that. And then I own this coin as well, about $400 worth of Shiba Inu. Like random freaking shit coins, right? And I just bought a little bit. This investment grew by 100%. This was funny. This was funny as fuck actually, because I didn't intend to leave the money there, and then I woke up and I saw that this thing blasted through like almost 30-40%. So I guess, hey, take that free money. So I'll probably exit this position soon as well and take my profits off the table. But that's your general risk-taking climate. Now, in terms of market sectors, I want to point out some attention to industrials. Okay, this thing has been on a massive freaking run, right? And that's a signal of a coming good infrastructure, strong economy signal. Okay, so I think a lot of people are thinking there's going to be a recession, but industrials being strong and being piled into more than most sectors. Let me show you a comparison. Okay, the only other few sectors is technology, right? Energy, not so much, right? It's not even broken into all-time highs, right? So this is not doing as good. XLF, your financials, barely breaking all-time high right now, right? Healthcare, breaking all-time high, but not that exaggerated, right? Learn to do simple analysis like this, right? Consumer staples, not broken out neither, right? This one, in fact, consumer staples, as you guys remember, I spoke about this being kind of bearish for the time being because people are conflicted on whether they should hold these positions. You want to own some consumer staples, but you want to own the ones that are competitive, right? And then with consumer discretionary, I spoke to you guys about when we were down here. This is just a month, maybe a month back. We spoke about the opportunity to buy here, right? Because this was looking bullish, and Amazon posted really great earnings, and there was momentum behind the fact that they would post good earnings, etc. And it makes up a big percentage of this sector, right? Then you have materials, barely broken out. You have industrials, look at that. Just look at that industrials move, right? Communication services, not broken out, not all-time high, right? Real estate, recovering. This is, by the way, another opportunity I wanted to share with you guys. Real estate, this is a good sector too, right? Look at this. So you had your downtrend, came out, did under the scoop move here to clear out liquidity, right? Scooped all the liquidity, sent it way up, now broke structure, right? So this is a broken structure here. We went from making lower highs and lower lows, and now we're making a higher high, right? And then a lower high, okay? So this is a potential uptrend forming. Now the confirmation here would be to look at a variety of things, which would be, the first thing would be, let's have a look at some of the EMAs, right? What are our moving averages telling us? Not this one, sorry. Where's my, here it is. So this is on the daily, and you can see that, okay, so my red is the 50, green is 150, and the blue is 200. So the 50 moving average is acting as support. The 150 and 200 moving average acted as major support here. So there is a potential for this to break higher and go up into $42, which is the previous local high here. Okay. Now, is the risk to reward ratio worth it? No, it's not worth it, right? Because technically, you could be taking on all of this risk. Where's my trusting position? Right, let's say you enter long here. You're taking on all of this risk to get this reward. It's a 1:1 risk to reward ratio, right? So this idea is out of the window. It's not a good setup automatically for the bullish opportunity. And the bearish opportunity presents a similar risk reward opportunity. So from the risk to reward ratio perspective, sucks. What would I do instead? I would focus on waiting for this to get up to the 42 and seeing how it reacts there. Or if it doesn't break this local high here at 41 or 40.70, then it's likely to go down and breach 37. That would be a continued downtrend. Okay. Now, what about the volume distribution? Strong supports at the $37 all the way to $38.75. Next is the same up here. Next is the same up here. You can see all the levels that I've marked out are pretty much at these volume nodes. That's how I leave my chart, so that I have the right levels in which I'm likely to see some buyers and sellers. Speaking of real estate, O and DLR, I'm in long shares. Those are really two good ones. Those are two good ones to own, definitely. O, I believe, pays out the monthly dividend, right? Next is real estate. Sorry, retail. Retail is starting to kind of break out here and make a potential run. And once again, so retail being strong here is a good sign of a potential economical rebound, right? If retail starts doing well, that means people are spending. And then obviously don't compare semiconductors. This is AI driven, right? So we don't even put that into the consideration because that is just battery crazy. And it's a good type of battery crazy. It's not like I'm dissing on it. It's just, I'm just saying it is what it is. So as I was saying, industrials, very strong. Real estate, potentially breaking out. And utilities, obviously very weak in this environment, tend to be dumped to the side, right? Who the hell wants a safe stock right now? These are where these things cycle out, right? And financials also approaching a potential breakout. So financials also the backbone of the entire sectors, right? Remember, for the entire market to be held up, you need two sectors. What are the two sectors? Someone tell me. For the market to be held up, what are the two sectors that you need? Tell me. The first person who tells me gets 1 month off gets a 1 month access to Discord if you're not in it. I want to incentivize this. Tech and financials, perfect, yes. But you're already a part of the Discord, Jerome. I want someone to answer who's not a part of the Discord. Financials for sure, yeah. It's fine. I'm gonna ask another question next time. I'm gonna give a chance to somebody else. Financials for sure. So you remember, it's really simple stuff, right? Financials for all money flowing in and out of businesses. This gives you a good idea of where financials move. Most in terms of business performance. Okay, think that banks take on a lot of exposure, and that's the risk that they assign, and how efficient that risk is. That is a telltale sign of the economy, okay? And then you have technology, which makes up a big percentage of it. By the way, just so you guys know, the percentage split between these two sectors. Look at VOO, the S&P 500 ETF. This mimics the index fund, right? So it has the holdings on a similar distribution from the S&P 500 index fund. If you go to the holdings, okay, portfolio composition, I'm looking for the, here we go. So, okay, here we go. So, the benchmark, you can see how close they are to the S&P 500, right? Does anybody see any number that's different? No. Why? Because this is a ETF. So you're buying a piece of the S&P 500 here, right? So the benchmark is the S&P 500, and the VOO is exactly the same as the benchmark. You can see every single sector, right? Now, this all makes up 100%, right? This probably all makes up 100%. It has to, right? But add up technology, 29.5%, plus financials, right? Which is 13.1%. That is a whopping 42.6%, okay? That is a lot, right? And the next one after that is consumer discretionary, and then healthcare. Know these things, guys. These are important things to know, okay? If those two sectors continue to be strong, it holds up the entire market. And financials hasn't even broken out here, right? So if financials rejects, comes back down, and then technology rejects, comes back down, then the whole market is likely to pivot the other way. That's with a 40% confidence, right? 40 to 45%, right? Simple ways to telltale. So now, next up, I wanted to discuss small caps. Obviously, we still have the upside on this one. We've been talking about this for a long time, guys. You know, buy opportunity was here, buy opportunity was here. I entered both times, okay? I have shares, so I own small caps outright in terms of equity. I don't want to deal with too much derivatives, but I do have derivatives as well, okay? I do have derivatives as well. That position is doing extremely well, okay? It's doing extremely well. It's like 5%, but because I have a very heavy risk assignment on it, I have almost 40,000 on that trade. It's really bearing good fruit right now, okay? And it's only the beginning. It's only the beginning. I had posted the trade idea on the Discord as well. So, okay. Now, next is the bond market. Okay, yields have been coming down here, but I've got a little thing where I'm starting to feel that the bond selling is going to stop soon. Okay, I think that after the next Fed meets, the bond selling program is going to take a pause. Okay, and that means yields are going to go further down, not higher. If you look at the TLT right now, which is the fat end of the bond market. Now, obviously, the inverse head and shoulder did not play out. So let's just put the clown hat on and admit that this was a wrong, or rather a setup that didn't work, right? A wrong setup. You can see how this just completely juked that setup, and this is the reason why these patterns don't always win. So don't always bet your hopes on these things. Be careful with those things, right? But genuinely, the market is on pause in terms of the Fed outlook, right? The market's thinking that the Fed is, okay, first of all, we had spoken about this a few months back. We spoke about how the market's too exuberant and in terms of the interest rates, right? But then the AI, NVDA announcement came around, AI stuff got announced, and then NVIDIA stock went fucking crazy, right? And the AI narrative came back around again and drove the market much higher, right? So the answers and the moves have been supported by sentiment, but the macro is still weak. In other words, we don't have a confident bet that the market is going to or the Fed is going to cut interest rates or even start on that journey. Okay. I want to see I think I have the information here. Let me just see if I can put. Here we go. Okay, sorry, I was using the bot to retrieve something. So, for the next meeting, right, March 20th, this is going to occur. There is a 96% chance that the rate will be between 5.25 and 5.0. Okay. And the existing federal funds rate is 5.33. Okay. So it's likely that we are going to pause. Okay. Now after that, it's very likely that there is going to be a continued pause in the May meeting. And then a very slight chance for a potential cut in the June meeting. And then the July meeting is the most confusing because there is an equal distribution between being cut or staying the same. So you can see this is a scared market to even try and put the data together right now. Okay. My view is that the market has overshot on the narrative of the expectations for rate cuts. But AI came in the way, sent prices up anyway, and that's just the way life works. It'll take a while for the market to realize that, there's actually not much holding this huge rally up, and then it comes back down and then finds support, and then a new fear emerges, and then we get a little bit of a correction, and then another bout of liquidity, and then we rally back again. So remember, long term this year, it's going to potentially be a very bullish year because of the presidential election year, which tends to be a bullish year, and there's no reason for us to change our narrative until we see otherwise. So we're bullish until otherwise. Okay, let me read some of these comments. I'm sorry, guys. I'm like just going really deep here today. So, and I hope this is enjoyable for you guys. Once again, if it is enjoyable for you, just hit the like button. Or share with me what you like hearing about and what I should do more of. I would appreciate you guys telling me that. Okay, let's see. BX Insurance and JP Morgan and have been driving financials. Yep, I agree with you. You can see the trends forming in the individual sectors before the S&P. Yes, you can. Absolutely. Those are what you call sector rotations, my dear friend. So, you should always try to look at the sectors. Remember, you have an edge with the sectors because with the sectors, remember, anytime you don't know which is the sectors in terms of the distribution, you should just go to finviz.com and go to the heat map. This is a very good indication. I've showed you guys this so many times. Technology is the biggest, financials is next, communication, then it goes like this, like a snake. Okay, so just follow that. You can know which sectors contribute more weight, which is important, and that leads rallies or leads corrections. Okay, Tesla plan. Let's look at it. So it looks like Tesla is shitting the bed here, pre-market a little bit. Let's see. We didn't even get up to here, so this was a failed wave so far. It looks like we are flirting around with 203, which has been the magnet point, and today we're just going to open straight at 199. Now, interestingly enough, this might be a good, if it permits, right? If it permits. If, let's say, Tesla opens up here, okay, and tries to attempt to break here, 198. And so I'm going to say, guys, this is actually a very good trade for today. I have 7 minutes, and I'm going to get done in the next 2 minutes because I want to actually prep to take this trade, okay? And if we get a break of 190, let's just call it 198, right? 198.25 or 198.40, basically this general area, it needs to be broken. And if we can get that break, I will be looking for two things. The first thing, for a immediate buy up to play a rally back to cover the gap, okay? The second, a break down further, okay? And then a bounce at 198. That's the two levels at which I want to look at for calls, not puts. If it breaks 198 and goes further down and then comes back for a pullback, I want to wait for the rejection before coming back down. So essentially, I want to watch for a rejection at 198. I mean, yeah, we could live trade actually. We could do that potentially. I wouldn't mind that. So that's kind of the plan here. Okay, I'm gonna repeat it once again so that you guys got it. 198. Let's just call it 198 is your key pivot point. Okay, so this area. Key pivot. We're gonna open in the pivot. If we come below the pivot, start rejecting the pivot, that's the bearish entry. If you come into the pivot, come below the pivot, but get scooped up in one of those liquidity moves, then I would go bullish. Okay. So if you want to wait for at least the first 15 to 30 minutes, that's for sure. Okay. 15 to 30 minutes. Wait for 15 to 30 minutes. We'll let the first candle play out, second candle play out. Of course, if it's off the gate and it goes like zoom, then it is what it is. Okay, so that's all I'm going to do for today because I'm actually running out of time and I really want to take this trade. So I'm going to end this stream here. I'll trade with the team live on Discord. Once again, you can sign up through the website for 14 days for free and get into Discord. I will ask another question in the next stream, and if somebody from the non-Discord community answers, I'm going to give you guys a month each time. I think it's going to be a fun experience so that we'll get more people with similar mindset in the Discord and fresh opinions, which will be nice. But I'll see you guys back on Wednesday, and I hope you have a good one. This is a great trade over here. I went through the macro with you guys. Now, if you drill down, you'll see obviously a couple of opportunities here and there, but there's not a lot of opportunities right now. So I would hang tight and only take these kinds of setups here. These are good where you have role reversal intraday. The rest are all kind of looking like duds. So I wouldn't over risk anything. Just stay cool, and I'll post more data on the Discord for you guys continually. All right. So peace out. See y'all on Wednesday, and yahoo.